这样 OK camera 不说
Camera. True.
OK 一起上
Okay, hello, good evening, everyone. I'm Suling from Apex Security Berhad, and welcome back to our Transition to Futures webinar series. Today's is session 2. Alright, I'm excited to continue our journey into the futures trading with you all tonight. But before we begin, allow me to introduce our esteemed speaker for today's sessions. Okay, Mr. Daniel Ang. With over 3 decades of experience in commodity futures trading, Mr. Ang has weathered numerous market storms, including the infamous crash of 1987. His expertise has led him to establish the Trader Academy International, where he imparts his knowledge through coaching and speaking engagement. So for today, the agenda includes there's part 3. Part 1 will be an overview. We'll discuss the recent economic impact, like the end of the bank term funding program, is BTFP. Mr. Daniel will provide insights into the technical outlook of major US equity indices, entry and exit strategies, and the importance of the trading mindset. So for part 2 will be the live trading sessions. Our speaker will demonstrate the live trading techniques, giving us valuable insights into practical decisions making. So after the live trading sessions, then we'll open the floor for your questions covering today's topic and any other queries about futures trading. Let's welcome Mr. Daniel Ang and get started with tonight's sessions. Yeah.
Very good evening to all of you. I'm sure we are no longer strangers. I'm sure last week you would have already seen me, and I have actually explained to you why futures trading is actually the natural progression into a markets whereby if you have a view, then obviously you can use certain financial derivative instruments to actually take your view into the market and potentially profit from those views. So today we're going to be continuing the session itself, and of course I will be updating you as to what is the latest news and what is latest factor that is actually driving markets. Now without much ado, let's get started. Now before we get into the content itself, I'd like to remind you that this presentation is not an offer to buy or sell any kind of securities, be it futures, options, or any kind of derivative, and of course any kind of margin product in which futures and options are, then of course they do carry risk of loss, and you want to be aware that you need to know your own risk tolerance before you attempt to trade any kind of margin products. And of course I'll be sharing with you my views on the various markets, and do remember those are my views and it does not represent the views of the host as well as the sponsor, and of course we will not be responsible for any action that you may take as a result of attending this presentation. And of course lastly, I would like to also let you know that this content of this presentation has not been vetted by the Security Commission of Malaysia. So with that, let's get on with it. And if you have any questions, do drop them into the chat box later on so that we can address them as we go along. And of course, the first thing that happened this week itself, March 11th is actually Monday, and this is an important date. Now, if you have been aware that last year about this time we have a banking crisis in which we have numerous banks in the States that actually collapses, and I think there are a total of about 4 banks that collapsed in the States, including the one very big one, Credit Suisse. Okay, and it's all due to the issue about very high interest rates. Now, if you remember about 3 years back to be exact, we have the pandemic, right? And now, of course, we have this global lockdown. I'm sure that is very, very fresh in our mind. And I'm sure in Malaysia, you call it the MCO. In Singapore, we just simply call it work from home. Okay, so what happened then was that interest rates was brought down to zero to actually resuscitate the economy, because once the borders shut down, nothing get shipped, of course, the entire global supply chain broke down. And in order to revive back the economy, the Federal Reserve, which is the central bank in the States, actually cut interest rate all the way down to the bond, which is at zero, almost zero. Okay, they don't call it zero, but it's just barely above zero. And what impact it has is that all those government bonds, the yield actually collapses. And in those days when the banks are in the business, they have to park their money in some kind of interest-bearing instruments. And because interest rate is almost at zero, that means to say that they couldn't find yield. The only place they could find some kind of interest was in US government bonds. So they bought a lot of those stuff at near zero interest rates. So what happened is that we have inflation back in 2022, which is like only yesterday, right? In March of 2022, where we had the start of the war in Ukraine, where Russia moved into Ukraine in what they call the special military exercise. And shortly thereafter, the Federal Reserve actually hiked interest rates. And as it is standing right now, interest rate in the States is anywhere between 5.25% to 5.5%. So from 0 to 5.5%, we can see all those banks that have bought those bonds when interest rate was zero, now we'll see those bonds actually were all underwater, because when interest rate goes up, the yield go down, right? So we can see that those holdings, that will not be a problem if they hold to maturity. However, we have an issue with depositors want their money back, okay? Because these days, bank run doesn't happen very slowly. It happens almost instantaneously because everything is online, right? So what happens is that when the rumors get around and social media starts to spread, and whereby there are certain banks that is at risk of going under, everybody wants their money back. So what happens is that the bank, in order to pay off their depositors, are forced to sell those bonds that they bought, knowing that they have to take a loss. And one thing leads to another, and within days we have 4 banks that actually collapses. And what happened was the Federal Reserve, including the FDIC, which is the Federal Deposits Insurance Corporation, came in to actually try to salvage the day. The Federal Reserve came up with a stop gauge plan, and that is to launch a lending facility called the Bank Term Funding Program. And that is only meant to be a stop gauge solution, which only lasts 1 year. So the 1 year actually expires on Monday this week itself. So what happened is that those banks, they are very exposed and they need funding because interest rate is high, and in order to keep the depositor, they have to pay the depositors very high interest rates, and they simply are not able to do that. So what they do is they need to borrow. So the Federal Reserve said, never mind, you give me all your federal, your treasury bills and your mortgage-backed securities, or you call MBS, and the Federal Reserve will value them at full value, knowing that these instruments that they are being pledged to the Federal Reserve is not worth 100%. But anyway, that was the solution. So the banks that are in need of funding actually pledged their holdings of all these securities to the Federal Reserve in exchange for funding. Okay, so their funding now ends when they borrow from the the BTFP, which is the Bank Term Funding Program. They do not have to pay market rates. They pay slightly below the discount rate. Okay, discount rate is about 5.5%, so they pay maybe 5.4%. So it doesn't sound like a lot, but it actually helps. Okay, so right now the program has ended. So all these banks, they still need funding. Okay, now we'll have no choice but have to pay full market rate. So will that cause the banking crisis 2.0 all over again? At least not immediately, because they have 1 whole year to pay back. Okay, so maybe what we will see here is that they delay the inevitable until next March. So for now, there's no major risk of bank failure. However, there is already one bank that is already wobbling. Okay, if you have been reading the news, you would have heard of this bank called the New York Community Bank Corp. Okay, we will cut to it later on. So this program is actually has been tapped. You can see when it started was back in March of last year. It started from zero and it went all the way up to $164 billion. That means to say $164 billion has been borrowed through these facilities, and the bank will have to pay back, but they have 1 whole year to do so, and the last date will be next March this time. Okay, so this will be like kicking the can down the road until next year. So for the time being, we can see that most of the banks that actually access these facilities, they are the smaller regional banks. Okay, these are the banks that actually were the problem when the bank run actually happened last March. Okay, so again, just be aware that this facility is no longer operable. Okay, if there's going to be another crisis with another banking crisis, the Federal Reserve will have to come out with something new. Okay, but for now, this program is over. Just be aware that it's over. Okay, so this bank that I was just mentioning, this bank is called the New York Community Bank. The irony here is that this bank actually was one of the savior banks that actually came in to save the other regional bank that was in trouble. They bought some of those shares of those banks. So right now, they have been reporting that they themselves are in trouble. Okay, so only last week there was some investor that came in to pump $1 billion into this bank, but you can see the share price has been collapsing. Okay, from almost $14 down to almost $2. So that is a massive amount of collapse. That means the value of this bank has almost been wiped out. So will this bank be a catalyst for a contagion in the banking system in the States? For the time being, it doesn't look like the case, but again, you can see that all we need is one bank to have this issue, and they are one of the stronger banks. Remember, they are the savior bank, and now it looks like they themselves need a bailout. Okay, so this is something that we have to be aware of. If there's going to be another bank that fails or about to fail with the share price like this, obviously we are looking at a banking crisis 2.0. Just be aware that this is very, very possible. Okay, now when we look at this issue here, the problem right now is actually the commercial real estates. Now remember back in the days where we have MOC, right? Everybody is told to work from home. So the idea of working from home actually caught on to so much so that even though we are now more or less back to normal, workers enjoy working from home and they don't want to go back to your office. And that is causing a problem for commercial real estate because they are not fully occupied. Okay, so if you are a developer that invests in these commercial buildings, and then you can see your tenants are not coming back to their office, and when they don't come back, that means to say that some of them actually don't pay. Okay, a very good example will be Elon Musk. Elon Musk has not been paying rental for his office building, and because he's trying to negotiate a better rental rate. You know, after he took over X, okay, which is Twitter right now, it's called X. So what Elon Musk does is that he's not paying rental, and there are a lot of companies out there who either are deliberately not paying or they can't pay because offices are left underutilized. So that is a problem for those banks that actually extend loans to these developers and these companies, right? So right now, the regional banks are having a lot of issues with value of their portfolio actually being decimated. So this is going to be an issue. Now, when you look at this particular issue about commercial real estates not doing well and banks that are exposed to this sector, they are the smaller regional banks, not the too big to fail banks. Okay, they do have those, but again, the biggest shoulder is on these smaller banks. Almost about 80% of all these commercial real estate are in the books of the smaller regional banks. And one way to profit from this particular news, okay, if there's going to be any bad news coming in for the commercial real estates, it will definitely impact these regional banks negatively. And the way to play it is through this index called the Russell 2000. The Russell 2000 is not a very well-known equity index that you can track. Okay, they basically are small cap index. We need to say that there are 2,000 component stocks inside this index here, but they are all mostly small cap. Companies that are listed inside these component stocks here are companies that you probably have not even heard of. Okay, but if you read news about a flare up in the commercial real estate and the banks are at risk, this is one index in which you want to sell. Okay, so right now we can see that this index has actually bounced back. Okay, and it has not been trading anywhere near the record high. We all know that there are bigger and more prominent index, okay, the equity index, the S&P 500, the Nasdaq, and even the Dow Jones. They are all trading at or near all-time high. Okay, the only one that has not done so is actually the Russell 2000. Now, this index here is actually more or less measuring the actual health of the US economy because they are the small cap index. Okay, so right now, if you got a view on the commercial real estate in the US, or if you have a view on the smaller regional banks in the States and you think that it's not going to do well, this is one index you can actually capitalize, which is also available through the CME Micro E-mini Equity Index. This is one of the 4 that you can trade. Although lately they have also launched 2 other index. Okay, we are not going to go there because these index are so new. It takes time for the volume to pick up. So wait for the volume to pick up in a newer index. This is actually the S&P 500 small cap and medium cap index here. Okay, so again, when we have some time in the near future, we can talk about that. Okay, but for now, like I said, if you've got view in the commercial real estate, if you think that it is going to be a trouble, there's going to be a problem, then this index is one index that you want to watch. Okay. Now, of course, the other things that we also has been aware since the beginning of the year, in fact, almost towards the end of December 2023, we already knew that insiders are selling. These insiders are definitely people who are either in the management or owner of these companies. They are big companies. Now, we all knew that somewhere towards the end of October last year, okay, we heard about all these talks about the Federal Reserve is like to cut interest rates. That narrative has actually lasted all the way to this year, okay, and that was the fuel that took the equity markets in the States to all-time high. So from end October, we had November, December, January, February, even the weeks of this month itself, this has been the only news that has been taking the equity markets ever higher. When during this phase, when the market was ranked to all-time high, we get reports that JP Morgan CEO Jamie Dimon is selling shares in the bank. Okay, we also have Mark Zuckerberg also selling Meta shares, and we also have the owner of Walmart also have been selling a lot of their own stocks. And of course, Jeff Bezos is take the cake. Okay, he sold almost $4 billion of his own company. So if these insiders are selling, okay, then you have to ask yourself, do they know something that we do not know? Okay, either they feel that the share price are becoming too rich and they want to cash out now. So if the insiders are cashing out, then maybe, you know, when we look at the equity markets in the States right now, we will have to be tempered and not be led by all this news about how the markets are too bullish. There's a possibility, like I said earlier on, either the market has already peaked or is very near a peak. Okay, so be very careful chasing this market higher. So if you have this view, then how do you take this view into the market using the CME Micro E-mini Equity Index futures to actually take advantage of this particular view? Today, we will explore the possibilities and how you can do so, okay? And of course, earlier on I did mention that it's a correction overdue, okay? Now, recent weakness, we can see that the Dow Jones has not had a new high for 3 weeks in a row. The last time they have an all-time high, that was 3 Fridays ago, okay? Whereas the S&P 500 and the National 100 still managed new high, okay, at the beginning of this week, okay. So we can see that the focus has been on AI, okay, especially led by NVIDIA. So if you have a chart of NVIDIA, go and take a look at the NVIDIA's share price chart. You will see there was a major reversal pattern that just occurred, okay, at the beginning of the week. Okay, so just go and take a look at NVIDIA shares. If you have been trading for a while, and if you have a little bit of knowledge about the price pattern, you will notice that there is a very clear-cut reversal pattern in NVIDIA shares. And if NVIDIA is currently the hottest AI stocks, then that will mean that the entire AI space maybe is also getting ready to reverse. Okay, we will explore that later on. Okay. Now, this is the Dow Jones weekly time frame chart. Of course, I'm showing you the closing price only. And as of yesterday, when the market close was 13. sorry, it should be 39,007. So the missing one zero, we're looking at the number looks weird. 39,007.45 was yesterday's closing price. And we can see the Dow Jones actually year to date, okay, it's up almost 3.6%. That is not a lot, okay, but we can see that from last October to the most recent high, we can see that the S&P 500 has risen almost 25%. So when you look at the Dow Jones is actually a blue chip index, which is monitored by global fund managers. So they have to index their portfolio against the Dow. Okay, so when you look at the portfolio manager, whenever they talk about whether they are outperforming or underperforming, they always measure their own performance against Dow Jones. So this is the blue chip index monitored by global managers, not people like you and me. Okay, so they are the one that is actually attracting a lot of retail investors' interest is this thing called the S&P 500. This is more or less a retail index, okay, and people who relate to this S&P 500. Now the thing is this: all these AI stocks and all these tech stocks, they are also listed in the S&P 500 other than the Nasdaq. So you will notice that the price action for the Nasdaq, especially the Nasdaq 100 and the S&P 500 are almost similar, okay? So we can see last year, the Nasdaq has outperformed all the other index. You can see year to date, as of yesterday's closing price, the S&P 500 is up 8.3%. You can see that the S&P 500 actually closed weaker yesterday, whereas the Dow actually closed stronger yesterday. So there's a bit of a difference right now. Every index has a little bit of their own personality. So just be aware, the Dow Jones is a global index, okay, and global index is measured, is monitored by the global fund managers, whereas S&P 500 is more domestic, okay, and people who are trading will tend to want to trade this index. Okay, these are more retail orientated. Now the other one that you want to watch will be this Nasdaq 100. Nasdaq has actually outperformed all the other index last year, and this year is almost the same thing. It's up almost 6% as of yesterday's closing price. Yesterday, you can see the market came off. It came off a little bit sharper than the S&P 500. So we can see the chart was actually very similar for the S&P 500 and the Nasdaq 100. Just to give you an overview, and later on we can go down to the individual index and see if there's going to be any kind of trading opportunity. Okay, and today, just about 21 minutes ago, okay, we have the release of the producer price index, which came in at 2%, which is within expectation. And then we have the retail sales is came in weaker. The market was actually pretty weak in January. It was negative 0.8. Market was expecting a positive of 0.6. It came in at positive 0.6 here. So the control group came in no good, 0. Okay, so this is today's expectation. Okay. So now that we know the background for what is moving markets as of now, okay, we want to go into this thing called technical analysis. Now, the way to look at market, there are either two schools of thought. Either you have a big picture, okay, very much like Jim Rogers. Jim Rogers is known to be a fundamental trader. He has the big picture, but he always confesses that he's lousy in timing the market. He doesn't use technical analysis as much, okay, and he acknowledged that. So you can actually engage the market from a broader perspective using fundamental analysis. But fundamental analysis has one big drawback. It doesn't allow you to time the market, okay. You know something is happening, but when to go in and when to exit the market that is a totally impossible using fundamental analysis. But it is good to have an overall view, because if you have a macro view, then you can use a macro view to be to be the basis of your analysis. And using that, you can actually time your entry and exit using technical analysis. Now, if you go to technical analysis, this is a very wide topic, okay? A lot of people use technical analysis using simple indicators, whether it is a moving average or whether they use momentum indicator like a RSI or the stochastic or the MACD, or there are people who use pure price action, okay, to trade. So this is a very wide topic, okay? But whatever it is, whatever your favorite indicator is, it must answer 4 basic questions. And I must emphasize here, if you have answered to all 4 of these questions, then you have the right to actually engage the market, because it will be very dangerous if you do not have answer to any one of these 4 questions here. 1, do you buy or do you sell? So you got to get this basic correct first. If you want to trade the market, whether you're going to scalp the market or whether you're going to do a swing trade that you're going to position yourself for a few days, a few weeks, okay? But you need to know whether you should be buying or selling. So there's a very, very basic question. And it sounds simple, but when you come to it, you'll be surprised. A lot of people doesn't know whether to buy or to sell on a day-to-day basis. And this must be addressed first, okay? In order to answer this question, you need to know one thing. Where is the market heading? Is it going up or is it coming down? Obviously, if you know market is going to go up, then obviously you want to be on the buy side, right? And if you think market is coming down, obviously you want to be on the sell side. But one thing I like about futures trading is that you can do both. You are an equity investor. Most of the time, you only buy. You are only long buyers, meaning say that you only make money as whatever you bought increase in value over time. But if the market doesn't go up, it comes down, then that will be a problem, because you cannot sell forward. Okay, sell forward means you sell short. If you have a view that market is coming down, ideally you should be selling now and then buy back later on if your view is correct. Right? Then that is allowed in futures trading, which you sometimes cannot do in equity markets. Okay, we also know that exchanges sometimes do impose a lot of restriction in short selling. Some exchanges actually outright ban the practice of short selling. Okay, so futures trading actually gives you the flexibility of playing both sides of the market. If you are very bullish, obviously you can buy. Okay. The underlying, and if you have a very bearish view, okay, like maybe right now we should be looking at a correction in equity markets, then if you have this view, then you want to be able to sell forward, right? Futures allow you to do so, okay? So in fact, I make the most money in a bear market. You can miss out an entire bull market. Now, you see the law of gravity works in financial markets as much as it works in real life, okay? Imagine you are trying to climb up a flight of steps. That needs kinetic energy. You have to exert yourself to climb. So obviously you require more energy to push yourself higher, because gravity is at work, right? But if the market wants to come down, it can come down really, really fast. We all knew that from at the end of the pandemic till now, stock market has actually doubled in value. Some even more than double, okay? And it is not just phenomenal for US equities. Every equity markets, okay, around the world, we have Indian stock market, we have Japanese stock market, they are all at record high. But just imagine if you have not been able to ride the bull market since the end of pandemic till now, and suddenly we have market collapsing, what do you do? Okay, just be aware, from the end of pandemic in 2020 till now, we are less than 4 years. Okay, if we have missed the bull market for the last 4 years, despair not, because I have personal experience. And in those days when I was young, I was gullible, I was innocent, I didn't know a lot. I don't have the fear that I now know the market can do to you. Okay, so basically I was short selling the Hang Seng Index in 1987, and the market went down in just 1 week what it took the market to go up in 5 years. So the entire move in the bull market over a 5-year period going to October 1987 finished that move in just 1 week. So can you imagine the velocity of a market that goes down so sharply, erasing all the gains in 5 years of bull market? So if you miss the bull market, spare not, because you can make money even faster if you are correct catching the bear market. So right now, I'm not saying that we are in a bear market. Right now, we are obviously in the bull market, okay? But a correction is always healthy for the long-term viability of a bull market, okay? Because the market has been parabolic. It has basically been registering all-time high every week or even every other week. So that is not healthy at all, okay? So that's the first question, to get a directional bias. How do you determine that the market is in what phase? Is it going up? Is it coming down? Now, I have a very unique way of actually determining that where the market is heading. The market has two trends. You either have a dominant trend, meaning to say that if the market has been going up, it doesn't go up every single day. Okay, there will be period in which the market will come back down, and those come back down periods are what I call counter trend. So the question for you is, depending on your time horizon, do you want to trade with a dominant trend, which is logical. You want to trade with the dominant trend, okay? Because if you trade with the dominant trend, even if your timing is off, you know the market is eventually going to go in one particular direction, okay? And if you are trading counter trend, your timing got to be exquisite. There are times to trade counter trend, and there are times to trade dominant trend, okay? So the question is, when is what? Okay, so you need to get the bias correct, the directional bias correct before you can answer the first question, whether to buy or to sell. Second question, where to engage the market, means your entry. Assuming you think the market is going to go up, you know you need to buy, but you cannot buy at any price because we are trading based on margin. So the entry got to be very exquisite. You want to be able to buy, ideally after you bought the market go up. Likewise, if you have a view the market has come down, whenever you enter a sell order, ideally immediately the price comes down. Because if the price goes up, okay, not only are you not making money, you will be stressed because you are trading based on margin. Margin means to say that you only put in a fraction of the total value of the underlying and you take a view, and this can actually kill you. A lot of people cannot manage leverage, okay? So a leverage product can actually amplify your profit potential, but you also amplify your potential losses. So be very careful trading any kind of margin product because your timing got to be just right, okay? So the entry is very important. So you must know what price range in which you should enter a market that will reduce your overall risk, okay? Now, there are all kinds of risks. There are market risks, and there are volatility risks, and there are all kinds of risks. So if you enter a market too early or too late, then your risk actually will be amplified. So it's very difficult to get it just about right, but it can be done if you brush up your skill, right? So now the next question will be, third, what if you are wrong? Assuming you have developed a view and you say market is going to go up, I want to buy. But what if your view is wrong? And then you have already bought. You must always think for the worst, okay? A lot of traders are like very optimistic gamblers who go to a casino. All they think is how much money I want to make today. They never thought of the possibility that they can lose everything, okay? So you must always realistically think about what if this trade don't work out, because losing and making money is part of the life of a trader. This is what we're all about, okay? There is no such thing as every day you go to the casino, every day you make money, right? Same thing for markets here. And when you are taking a position, actively trading, there is no guarantee. In fact, it is almost impossible to be right all the time. There will be time in which you will be wrong. So that's part of trading, okay? Losses must be recognized. If it's possible, do not avoid this topic of recognizing that today you take a view, you take a position, that position may not make money. So you must always ask, what if I am wrong? Where do I get out? The biggest job of a trader is not how much money he makes, okay? It's when he's wrong, can he control his overall risk without blowing up his account? Now, novice trader would take the view is that, okay, I only put up a small margin. I have X amount of money in my bank, in my trading account, so I can take a lot of risk. Worst case, I lose everything. That should not be the way you should be looking at trading. Now, losses is part of the game, so accept it. Always plan for the worst. If you can take care of the worst, then the profit will take care of itself. Because the last question is, what if I'm right? And then you think, what a stupid question. If I'm right, I make money. Obviously, you make money. The thing is that if you don't take the profit is never yours. So there must be a price target in which after you are right and the price gets to your target, you need to exit the market, okay? The biggest problem that most people have, even when they sometimes get their view correct and the position is healthy and they are making money, and because they want to ride the trend, okay? When you ride a trend, most of the time you didn't know where to get up. Okay, if you don't know where to take profit, usually what will happen is that the price will come back down, and then you say, if only I take profit earlier. There's no such thing. Okay, one of the things that we always talk in the dealing room, I say, I used to be a dealer. The dealer will say, if only I know earlier. Nasi wan zayang, like what you call the Hokkien would say, right? There's nothing new about if only you knew. We don't know. Okay, so you need to have a target. So these are the basic 4 questions. What to do, buy or sell, where to buy or sell, what if I'm wrong, where to get out, what if I'm right, where to get out. So these are the basic questions. If you can answer whichever technical analysis, whatever indicator you use, whatever technique you use, it must answer these 4 basic questions. So I'm going to show you how I look at markets. It may not be everybody's cup of tea, but it is my cup of tea, okay? So today we're going to talk about equity index, okay? Because we have so many things that you can trade, right? We have been talking about equity market, so I'm going to revisit this. I have shown you this slide before last week. We have 4 major CME, micro, E-mini equity indexes in which you can actually use to trade your views, okay, depending on whether it is bearish, bullish, it doesn't matter. If you got a view, you can use this product to actually engage the market. The most popular one is, of course, the S&P 500, but this is the micro E-mini S&P 500, simple as MES, and remember one is $5 times the index itself, and it moved by quarter point. Quarter point equal to $1.25, and the rest is actually for you to actually go and visit. The rest are all quite simple, right? So it expires on the 3rd Friday of the calendar month. So right now we are in March. So next Friday, if you are trading the March contract, just know that it will expire. So the whole idea is that if you are trading next week, do not trade the March contract. Trade the next available contract, which is the June contract. Okay, that will be the next most actively traded contract. Okay, just monitor the volume. Once the volume starts to decrease in this current March contract, and you can see that the volume picking up in the next contract itself, which is June contract, trade the June contract, whichever offers you higher volume, trade that particular index, because although it doesn't end in delivery, but you don't want to be caught in a situation whereby the liquidity actually collapses, okay, because it's going to expire soon. So do not trade into a product that is about to expire. Avoid that at all costs, and that will be especially acute if you are trading a commodity futures contract that actually will end up with delivery. We will talk about it. We'll talk about the micro gold itself. Gold actually is deliverable. Okay, so be very careful. Do not trade into the very last week, and then you find that whenever you want to exit, you cannot find counterparty, which is terrible, right? So that will increase your overall risk. So again, one of the most popular one, in fact, the second most popular contract in terms of the volume traded per day is actually the EMS, the micro E-mini S&P 500. The best, the highest volume, because of all this talk about AI and artificial intelligence and tech stocks. This one has been taking the headline for the whole of last year, including this year, right? So the index here is $2 times the index, and it also moved by quarter point, but the quarter point is only 50 cents. So here is $1.25. Here is 50 cents. Everything else remains the same except for the margin requirement. Okay. Then of course, if you want to trade the Dow Jones, you could do that. Okay. This one moved by also 1.50 cents. Okay, very, very small contract. You can also watch this. The other one I did mention earlier on is the Russell 2000. If you got a view of Russell 2000, this one, every 0.1 point equal to 50 cents. Okay, and this one in terms of margin is the most affordable. So all 4 depend on your flavor for the month. Okay, now let's go into the live trading. Before I can show you the chart, I have to exit and show you a new sharing. Let me allow me to do that. Okay, just give me a moment. I will stop sharing. I will go to. Let's see. Okay, I want to share the. Oh, it's not here. Hang on. I have to show you the trading view platform because I'm going to do my analysis using the trading view, and of course we will take it from there. And let me see. Where's my trading view, right? Oh, there. Here you are. All right, I hope you guys can see my trading view chart here. Now, let's take a look at what just transpired over the last half an hour or so in which we have just came online. We can see that this is the micro E-mini S&P 500 futures, right? We can see that the market high traded is 5,257.5, and this was on Monday itself. Okay, last Friday. So we can see this was an all-time high traded. And as far as the futures contract is concerned, the micro E-mini S&P 500, this evening itself, we have a marginal high for the week itself at 5,253.5. So it is not close enough to take it out of all-time high, but it was brushing against it. And currently, we have this bar here. I want to show you this. Okay, this is the 4 hours time frame. Okay, you have to do your homework before you actually come into the market when it's active. Always do your analysis before the market becomes active so that you understand. So what happened yesterday night, we have this particular bar here. Now, anybody who has been aware of the candlestick pattern, this is a very bullish development. Prices went down to as low as 5,217.5, but closes in this manner. This is a very bullish development on a 4 hours time frame, and that means the tendency is for prices to go higher. So right now we have this idea that perhaps a high in equity market could be either in place or very nearby. Now we can see that this is a different color box here. Okay, I use because I'm a very visual person, I need to see how the fight for dominant actually occur. Okay, whenever you have forces representing buyer and seller, the buyer's job is to push prices ever higher, and the seller's job is to push the price ever lower. So the interaction between the forces representing buying and selling will cause the price to fluctuate. Okay, and they will fluctuate within a certain set parameter. My job is to find out where is the parameter. It's just like a boxing match in which two fighters, okay, is trying to knock out each other, but they all fight within a ring. Okay, so in my simplest analogy, this little box here that you see that I have signified with a different color. Okay, essentially I use it a pink or a red color, but it come out like this because of the background color is different. Okay, so we can see that right now the market has actually have a high of 5,257.5, went down to 5,157 even, and then bounced. Okay, so unless the price trades beyond 5,257.5, the parameter in which this market is trading right now is called a counter trend. Now, don't forget, if I minimize this chart and show you where the market start rallying, okay, you will notice that by using this box system, okay, I have been able to monitor the changes over time. The market actually peaks here in October of last year. Remember, that's when all these talks about interest rate cuts, okay, comes in, and that was enough to cause the market to rally. From the very first box where the first parameter shifted from down to up, I was able to monitor this change in sentiment. And this sentiment is telling me this is the dominant trend because we get a series of green color box even up to here. So right now the market is actually very bullish. So ideally, if I get a chance, I should be buying to trade with the trend because they always say the trend is your friend. Okay, so but right now prices is outside of the green color box. It means to say that so long as prices is fought within this green color box, it is favoring the buying side. The moment it leaves, it is massively in favor of the buyers. Okay, obviously at some point the seller will push back, and this is where it started from the all-time high of 5,257.5. So we have the dominant trend that's up, and if I'm buying, I want to be buying inside this green color box and not outside the box here. Now we have a counter trend for 5,257.5. This counter trend now is in place. So today, based on what I see on a 4 hours time frame, it makes a lot of sense to trade counter trend. What it means is this: that if I believe that this market is still in the midst of correction, odds of the market coming down is what I think may happen. So if that's the case, then I should be selling. So when I sell, I'm trading against the market, and this one needs a little bit of skill. Okay, so before you can actually trade counter trend, make sure that there is a counter trend. So the fact that I have boxed this up here is telling me this is the counter trend. I want to be selling. And where is my point of invalidation? This bearish view will no longer be valid the moment price trades above 5,257.5. So can you see where I'm leading to? If I'm selling now, my risk is very small because all I need to do is put my stop just above this all-time high and sell the market. If I'm right, the market have a target of 5,095. You can see this horizontal red line here. The way the system that has been developed for me, okay, is that I sell now, I risk a market that goes beyond 5257.5. Currently, the market is trading at 5243.5. Very small risk, 13 points. Okay, 13-point risk. And if I'm wrong, I cut loss if the price goes above 5257.5. But if I'm right, I have the potential to do a profit taking at about 5095. This is massive risk reward ratio. To give you an idea, if this is representing my risk, 1 unit of risk compared to 1, 2, 3, 4, 5, 6, 7, easily 1:8. So this is a massively favorable risk reward ratio. For every $1 that I can lose, I stand the potential of making $8, assuming I hold all the way to the target area at 5095. Will the market get there? I have no idea. But from the perspective of a risk reward, it makes sense to be selling. So can we sell? We have to go down to the lower time frame to look for that confirmation. Yes, right now, based on what I see, it makes a lot of sense to be selling, but I need to see something to tell me that yes, sell now, and the market will go down immediately. Okay, I need to go down to the lower time frame. So usually what I do is, after I develop an overall view, I wait for the confirmation. Do I have confirmation? Yes, I have seen this bar here. This bar is a very solid bar on the 5 minutes time frame. Okay, so I do not develop my overall view from the lowest time frame onwards. I need to develop a view from a higher time frame. Using that as my reference, then I go down to the lower time frame to look for a better entry. So right now the price is down. Okay, it means there's this bar over here that suggests the prices are more likely to go down and go up. So I need to. And then we see a market that actually try to recover. Where it is right now is about 50% of this entire range here, from this high to this low here. So does it make sense to be selling? Now I say, okay, I want to try to sell. So what do? I go to your platform, right? So before I could go to your platform, I must exit this platform and go into your trading platform. So once I do that, I can actually execute a trade. So remember, I was looking at the EMS, okay, MES, okay, which is the micro E-mini S&P 500. This is the one, right? So currently, the market bid is 5174 and 3/4. Offer is a 5175 even. I want to sell right now. I want to sell one lot. I can sell. Okay, I do a sell here. Then position, okay, which is selling. So what I need to do is always protect myself with a buy stop. Okay, have I sold? It says pending. Forgive me if I'm not familiar with your trading platform because I'm new to your trading platform. Okay. However, I want to be also putting a stop. Let me see. I can put a stop here. I have to get to know your platform.
Mr. Daniel.
Okay. Yes.
Yeah. We cannot see the chat now. I know the trading platform. You can try to share
see
again.
The platform.
Yeah, you try to share again.
Okay. Okay. I have to do that one more time. Okay. Yes, I think you should be able to see it right now.
Yeah.
Can you see the platform right now?
Yes. We saw that.
Okay, I have actually tried to sell earlier on. I'm not sure. You say it's
pending. It's
pending.
Correct, right?
So how do I make this non-pending? I want to execute a trade. Have I sold? Can you see whether I have the order is done?
Pending meaning still working.
It said pending.
Still working.
Still working. I thought I have already sold at market. I did not sell at market. Okay, let me cancel it and try again.
Sure.
How to cancel this order?
Right click.
Right click and modify. Is it cancel? I cancel everything. Cancel. Okay. Is it cancel? It's still pending. Let me see how. I thought I would just click sell. You should be able to sell. Fast.
Change the.
Can I not sell?
Change the GFD to market. The order type.
Oh, okay, yeah. Okay, but it's not active. I can't change it. All right, let me see. How can I cancel this existing order?
Right click.
Do I click? Yeah, it's not active. Your buttons are not active anymore. So anyway, I wanted to sell. It's getting better and better, the price. cancel all order. Yes, okay, now it's cancel. I want to sell right now. I want to move to, is there a market order? Which one is a market order? Fill or kill, is it? Which symbol here represents your market order?
Okay, order 在 limit 这边。
Limit. Okay. At the limit there, sorry. Just on the left of the price, there's a limit. Yeah.
Okay, market.
Yeah,
Okay,
sorry.
I get it. So I want to sell now. Okay, because I already have a view. So looks like strong position. Okay, even better. Okay, the price is at 5175 and 3/4. So remember, my stop is for all the way to a new high. Okay, so I want to also put a stop order just to be sure that if the market move against me, I will not be left naked. Okay, I do not want to be left holding the position whereby the market can actually move against me. So what I need to do now is to put a stop. Your order here looks.
Mr. Daniel,
Okay,
you
let me see.
change the market. Yeah, you change the market.
I have already filled. I already got one order in already. I just
Yeah.
want to put a stop.
Stop 没有加的 ，stop 没有加的。
Do I put GDC on your platform?
Yes, you can.
Change. Okay, change your order for working order. Okay, I'm slowly getting it. Okay, slowly getting
On
it.
the plus button, you can
Okay,
actually
okay.
adjust on the stop.
On the fast button. Okay.
Plus
fast
the
button.
plus.
Or plus button. Where is your?
Yeah,
this one?
yes, that's the one.
Okay. How do I do that?
Can you
okay,
see the
stop.
limit stop and stop?
Yeah, I want to do stop. Okay, so I want to put my stop order at a much higher plane. I want to put it at 90. Okay, so this will be my limit order. So I put a buy limit here. Are you sure you want to place the stop order? Yeah. Okay, so now order in. Okay, and the price has gone up a little bit earlier on. The market was at 5175. Now I think the market is at 5173. So right now I have position. Now let me revert back to the trading platform itself to show you where the order is. Okay, I have to stop sharing and then go back to share a new view. This is not the best, but it is what we have. Okay, you can see prices are coming down. So I have placed an order above this level here, and I want to make sure that prices is able to withstand a move. Now this is of course the 5 minutes. I want to go back to the 4 hours. 4 hours means 5-1. I got to place my order actually at 5-1. Let's say I don't want to put it too close. Maybe I should put it at 5260. 5260. Let me go back and amend that order. Yeah, I'm going to go back to this again. Back to this. Okay, hopefully you can see my chart. Your trading platform right now.
Yes.
Okay. Earlier on, I did put a pending order here. 5290. I want to modify this. 5290. I decided to go in and type. Okay, 5290 is where I want to put my stop. So I have a order in place which I just amended. I want to put it above the high so that I want to take this market, all the way down to ideally my target price is 5090. Okay, so that is actually quite a distance away. So this is one order. The other order which I have a very firm view is actually gold. So now let me get out of this and show you the gold chart. So now we are back to trading view. Okay, you can see that the market on the 4 hours has actually made a big move. Now where we are right now on the micro E-mini S&P 500 if the market ends here at the hour, we of course is not there yet. That will happen at 10 p.m. Okay, because right now we are about at 9:23. So if the market ends anywhere like this at the end of 10 o'clock, okay, which is another 36 minutes time, okay, this will be a very good development because this is what we call a outside bar. An outside bar means the current trading range, the current bar, have a high and low that actually engulf the previous bar. Remember the previous bar, which is the green bar here, the high is not as high as the current bar and the low is not as low as the current bar. So if the market closes anywhere like this and looks like this, it has all the trapping of a reversal. Okay, so the market is more likely to come down and go up. Okay, so based on this, I am going to hold on to that position. Then of course, the other market that I actually have a very solid view. I hope the market have not moved that much, okay, since we last talked. This market is the gold market. Gold actually registered an all-time high at $2,202.60, and it ends as a reversal pattern. You can see this bar here. The individual bar here is a reversal pin bar, okay? And it means at some point, at the highest point, this bar was a very solid green color. By the end of that bar itself, on the 4 hours time frame, it closes like this, very close to the opening price. Now, this is, if ever there's going to be a reversal pattern, this is one of the most common patterns you can ever see, okay? So this bar actually happened and the prices subsequently actually went down. Okay, the low trader is $2,156.20. So right now, although the market is very bullish, there is a counter trend in place. Okay, and currently where we are right now, it's not the best price to be selling. But let's see what happens. Okay, if I have to do a trade, I want to be selling because this is a counter trend, and a counter trend like this will it's very likely to unfold in a three-wave pattern. Now, one of the techniques that you can actually use is pattern recognition. A three-wave is usually a corrective wave. Now, what it means that the underlying trend is very strong, okay? However, no market go up every single day. At some point, there will be profit taking, and this is currently what the market is doing. The market is taking some money off the table, and it results in a pullback. This pullback, you can do two things, okay? One is to trade the counter trend. If the price is right, you want to be trading, you want to be selling, hoping that the price will come down. And usually the relationship is the first leg, whatever the value, okay, is almost equal to the second leg. And the confirmation will come if the market trades below $2,156.20. So this will be what we call a three-wave pullback. And when I look at the pullback area, there is a range of prices in which I'm targeting. The equality level is $2,159 even. Okay, and then when I look left, I saw that there is a very strong big bar here. This bar is what I call a flush. A flush means there was a imbalance between the demand and supply. If the market is normal, market will gradually go up. So the candle bar is usually quite small. Okay, but if we have a sudden big move like this, okay, these are what we call a flush. That means during this moment there is a lot of buying interest, but there's simply not enough selling interest. Okay, it means to say the spreads are quite wide. Okay, but price goes up because there's a vacuum favoring the buying side. So right now I saw that there's a flush here, and this is always the clue you look for, because market always leave behind clues as to what it wants to do. Because you have to recognize the fact that you and me, we have no bargaining power. We don't move markets. The one that can move markets are the big boys, the big funds. Okay, so whenever we have a big flush like this, we always look for the clue where they start to accumulate buy position, and it's always almost the case. It's either the bar before the move or the few bars before the move, and they are usually very small bars. This is the accumulation of buy position. It is not always accurate, but these are clues that the buyer left behind. So what we got to do is, if you can recognize the area in which the big boys are buying before the market went up, the idea here is that if the price comes back again, hope have the free hand to decide whether he want to buy or he want to sell. Usually the junior dealers take instruction from the senior traders, and the senior traders will tell the junior traders where to buy. Let's say, for example, I give you X amount of dollars and say, okay, you start to buy from this range onwards. You can only buy within this range. You cannot sell, you cannot do anything. If the price go beyond the range, you don't chase. Okay, so what happens is that there will be people buying here, assuming I'm just giving you a theory, okay? All these junior dealers has been looking to buy, and they have to buy very quietly so that the whole world doesn't know that they are accumulating long position. Because if the if the cat is out of the bag, then the price would have gone up, right? So you got to do it stealthily, quietly, without alerting the market. So they cannot do big size; they got to do small size, small size, small size. So while they are accumulating buy position, but they have so much allocation that have not been fulfilled, okay? And the instruction is to buy within a certain range, use up your allocation, but before they can use up the allocation, price has already gone up, okay? So what you do, as price come back down again, as the instruction has not changed, you continue to buy, okay? So this is the whole idea. Prices are doing a three-way pullback, and this is the area in which I think, okay, the accumulation has started, okay? Their range is $2,131.80 to $2,135.90. So I want to buy within this bracket of prices because we have a three-wave classical pullback. Equality move is at $2,139. So this range is actually within this bracket of prices. So right now, this is where we are right now. The price is at $2,169.20 last. So I have a choice. Do I sell or do I buy? And if I say I want to sell, I don't want to sell at this price. I only want to sell inside this price. This is the exact opposite of this. Okay, you can see there's a big flush on the downside. And this is the accumulation phase. The accumulation, or what I call it, the distribution phase, okay, is at $2,181.80 to $2,192.20. If I want to sell, I want to sell here, but I have already missed this target, okay, because the market has already moved away. If I have sold earlier on, because this range has already been long identified before the market traded to $2,185.40. So right now, can I sell? I would rather not sell. But if given the choice, then what happens? I can buy. Because this market is actually very bullish. Okay? So if you miss the ideal price to sell, don't chase. Okay? Now, why I say you got to think like an alligator. An alligator doesn't need to eat every day. They can go for months without feeding. So how does alligator hunt? They have very short legs. They don't run after their prey. So they cannot be like a cheetah chasing after their prey, right? So they have to wait quietly inside a pool of water, ideally a watering hole where the enemy will come and drink, okay? And then they can stealthily, swim to the near to their target, okay, and pound on them as they are busy drinking water. So we got to think like that because at the end of the day, we as retail investors, we are handicapped. We cannot chase the market. We got to be more tactical in our approach to trade. So we have to be using different tools. Okay, we have to have patience. For those without patience and need to be in action all the time, maybe this is not something you can do because at the end of the day, there's only one objective when it comes to trading, and that is to make money. If you are in the market because the market is open and you're think that it's very exciting to trade, then this is not something you should be doing. Okay, you can only do this if you only have one focus in point. Okay, which is how can I be profitable? And in order to be profitable, there are times you don't trade. There are times you wait for the market to come to you. Okay, if you want to sell, you place a limit order at $2,181.80 and just wait. Price may come, price may not come. It's not a question. If it comes, you got a position. If it doesn't come, you have no losses. Okay. So right now, this is a counter trend to a very bullish market. You can see this market here actually started to go up a long time ago. Okay. It happens in October of 2023, just as all these talks about interest rate cuts. Okay, but I think gold market is not so much moving on economics. There's a fear in the market right now. Okay, and that is where most people are actually buying gold. Okay, when we look at the geopolitical scene around the world, we are definitely in a very dangerous period of time in history, whereby war is going to be more likely than not. Okay, so the whole idea of people are buying gold is because there is a seismic change in geopolitics. There's a seismic change in the global financial markets here because we have de-dollarization that's going on. Everybody else is worried about keeping money based in dollar because the dollar has been weaponized. So we want to be aware that there is this other thing that's moving the market here. It's not necessarily economic. So you want to, as much as possible, if you're not selling today, then you should be looking to buy. So if you can sell, 2,181 and 80 cents to $2,192.20. Well and good. So you can place an order to sell here, put a stop just above 2,192.2. Okay, because this is the new parameter in which the counter trend is trading. Okay, the all-time high is $2,202.60. If you think this order here, if you place a stop here, it's a bit too close, then put it above the all-time high. And you take a longer term view, but don't have to, because at the end of the day, this is the minor pullback, okay? And at the end of the day, if you can, if the price comes down to a price that makes sense to you, this is a good price range to be buying. I want to be buying. If I miss the seller, I want to be the buyer. So this could be something that you can work on. Today, maybe you do not have a chance to buy or sell. Never mind, just keep this in mind. If the price ever come to either one of these two bracket or prices, then you have something to do. Until then, just watch. Okay, so the biggest thing that you can do is to do nothing. Even if you have a position and if you do nothing, that may save you a lot of money. Okay, now let's take a look at the S&P 500. Has it gone anywhere? Okay, we still have the outside bar that is still being formed in the 4 hours time frame. Let's go and check the 5 minutes. As the 5 minutes range has it accelerated to the downside? Okay, it's still very early in the evening. Okay, we are only 1 hour into this, and we do not necessarily have the momentum just yet, because there's no more news that can move this market. The next news that can move the market is tomorrow, where we have the Michigan Consumer Sentiment Index. Okay, even that may not necessarily move the market, but usually when we move into a weekend, the weekend can see a bit of volatility. Okay, for now there is no sentiment that is driving the market. The market could be moving purely on technical consideration. So right now, the position that I've sold is looking to be all right. Okay, so can I take profit? Obviously, I can take profit, but I'm going for something bigger. Okay, so when I go for something bigger, that means to say that I'm not too concerned about the small little movements here. Okay, all the while, at some point in time, I would have to actively manage my position. I have sold, and if the markets accelerate to the downside, the first thing I can do is to move my stop, okay, to break-even price. The whole idea is to protect what I already have, or what the market is giving me right now, because it's a seed to return back to the market what they have already given you. So the whole idea is that the stop is not a static stop. It must be managed actively, okay? Because if the stop was stop, that means I lose money. So right now, if the market is paying me, I must make sure that I must protect it, but this is not the time to move my stop, because the market does not have a big move yet. Okay, if we have an acceleration to the downside, I know I'm already in the money, then I need to make sure that I don't lose money. I don't make money, but I don't want to lose money. So once you get to the situation in which even if the market moves against you, you will be stopped out, but you will not lose money, your psychology is so clear. Once your mind has no stress, you see market from a very, very healthy position. Okay, so this is the way you should approach trading. Okay, not buy sell the whole day. Okay, you don't make money by busy buying and selling. Okay, you know there are young folks out there who love to buy and sell, scalping the market. Yeah, it is very exciting. I used to do that when I was a lot younger. Okay, but after trading for almost 40 years, I realized, yeah, the fun is good, but at the end of the day, am I profitable? You want to be profitable over time. You may not be profitable day to day, but you want to be profitable as much as possible on a weekly basis, on a monthly basis. So at the end of the year, you come up with a nice report card. Okay, so this will keep you in the game so much longer. There is that common sense that you must have to develop before you can actually take this market to a whole different level. Trading can be really, really profitable if you know what you're doing. Don't overtrade. Always make sure you protect your position. Always enter a market with the view that you could possibly lose money. Always determine where is the maximum loss that you want to take, and take it from there. Okay, and I think I will take questions. If you have any questions, I want to take questions from you. Okay, let me exit this and go to other platform. Let's see. Please stop sharing and go back to.
Mr. Daniel?
Yes.
So we are now opening for the Q&A session, is it?
Yes, I will take questions if you have any question for me.
Okay.
Keep the question coming, because at the end of the day, I want to know whether you have actually benefited from this session. Because if you're going to be passive and just watch or wait for somebody to pop the question, then you are not actively participating. You know, we don't do a lot of live trading for you guys for futures. So use this opportunity to actually pick my brain.
So audience, if you have a question, please type your question in the chat.
We are definitely in a very exciting phase of the markets right now, okay? Because right now we have a situation in which risky asset has all gone to record high. The non-risky asset like gold has also gone to record high. So this is not something very usual. Usually when the market is in the risk-taking mode, of course, equity markets will do well, Bitcoin will do well. But right now, we also have gold, which is supposed to be a non-risky asset. Okay, whenever you have a risk-off, people will pivot to products like gold, for example. But right now, we have everything that goes up. So something is not too right here. Okay, something else is missing. So you have to always ask yourself, should I be taking more risk, or should I be taking a product that is supposed to be lesser risk? Okay.
Hi Daniel, this is Sandra here. I'd like to ask.
Hey, hi.
Okay, regarding the live trading you made, right? So
Yeah.
you put a sell position. So then you're gonna prolong until you have satisfied to the amount, the profit you wanna make, right?
Yeah, I have a target. Yes.
Yeah, you have a target. Okay, so if the target goes to overnight or probably 1 or 2 days or probably a week, so how are you gonna explain that? How are you gonna monitor on that?
Okay. I have not been day trading for quite some time. I used to day trade, okay? But with age, I have mellowed down. So nowadays, I take a term view. I do swing trading most of the time. And when I take a trade, I am prepared to hold positions. So long as my risk is determined, it doesn't really matter, because at the end of the day, if the market has the potential to move to a certain target, I want to see that develop. Once the market start to move in my favor massively, it doesn't have to reach my target immediately, then I can shift my stop down to break even. And then if the worst happens, if I can stop down, at least I can try again, having to take on more risk. So that basic approach to trading is very different, because like I say, I am trading with a little bit of a longer term view. Okay, so whether you are somebody who love to do day trade, you can. Then you're gonna have a different tool set to use. No, I have techniques that allows me to do scalping day trade, but that is very intense. That means to say that I cannot leave my screen. Okay, I have to be eyeballing the trade as it's happening. So this is my approach. It doesn't have to be everybody's approach, but it is an approach that has worked very well for me, because it suits my personality. At the end of the day, we all have to ask what kind of personality we have. If I am somebody who always needs to be in action, it is almost impossible to ask me to sit still, because my personality doesn't allow me. Likewise, if you are somebody who are very patient, if I ask you to scalp the market, you will be totally out of your comfort zone, and you feel that this system doesn't seem to work for you because it's so intense.
Okay. Mr. Daniel, we have a question from the floor. Yeah. Thank you. Thank you, Mr. Chandra, for your questions. So the next question will, if I buy gold now, will I be worried for a sudden drop?
You have to make sure that you buy with an idea that what if the trade doesn't work out. You can have a short-term view, you can have a medium-term view, you can have a longer-term view. What I know for sure is that the low that we saw last month is never ever going to come back, because I have a certain broad macro view. Okay, so right now every market that dips in the gold market is an opportunity for me to buy. So I have to identify all the potential buying range. Okay, you see what you can do here is this. Most people will do one in, one out. Means if I buy, the next action is to sell. The sell can be a result of taking profit, or the sell can be an action to cut loss. Okay, but let's say I have substantial, I would say substantial, let's say I have X amount in my trading account, and I want to develop a strategy around gold. Okay, There's this term called scaling in. Scaling in is very much like what you call dollar averaging. Okay, so you do not put all your egg at one level, because there's always the possibility that the market may go lower than what you want. Okay, so you want to space out that strategy. Let's say, for example, I have $5,000 and I want to be buying gold. And each time, if the market comes into a bracket of prices, which I have predetermined where the level of demand is, that I want to look for reason to be buying. I may not be able to buy if the market doesn't come down. So if market ever come down, I already know what level I want to buy. Okay. Again, when the market comes to those levels that you have predetermined, okay, then you need to wait for the reversal signal on the lower time frame. You need to buy just when the buyer are in, not to buy before the buyer come in. Okay. So in order to do that, you need to see, look for confirmation that the buyers are in. How do you know? You look at the individual candle bar. Now you have to spend a bit of time to understand the individual candle bar, because the candle bar can be a single bar, it can be a pin bar, it can be a 2-bar setup, it can be a 3-bar setup. Okay, it doesn't matter. The whole idea is that you've got to have all these in your repertoire of tools. Okay, so when you are trading, you can take out this tool and say, okay, this is what I see. This is a potential reversal signal inside an area where I have previously identified is where the buyers are actually accumulating position, and I want to do the same thing like what they did previously. So there's no one single tool that you use every single day. Now, a surgeon, do not go to the operating theater using the same set of tools every single day, because his surgery may be different, okay, from day to day onwards. So again, you want to make sure that you have all the tools that you need, and all this require you to be more conversant with every aspect of trading. It doesn't have to be very complicated. It doesn't need to for you to know all the indicators out in the market. But if you have a set of tools that you use, make sure you know how to use them at the right time. Okay. My approach is very simple. First, I find the directional buyers and I decide where I want to buy or where I want to sell. Do I trade counter trend? Do I trade with the dominant trend? And I have a way of determining what level is suitable to be doing what. Okay. If the risk is too high, I may decide to step aside and watch. Okay. It doesn't matter that you miss an opportunity, because there are 1,001 opportunity. Today, if the market action is not in equity index, it could be in commodity. If it's not in commodity, it could be in currency. So, you know, when you are a trader, you want to make sure you monitor everything, because you cannot trade the same thing day in, day out. Okay. Sometimes the action is somewhere else. And if you are stuck, okay, your capital is employed somewhere else, you can't take advantage, okay, of something that is actually moving. What is moving? Everything is moving these days. Okay, Bitcoin is moving, gold is moving, the dollar is moving, and equity markets are moving. Okay, so we can see that all these talks about cutting interest rate also means that treasuries are also moving. It means you can trade the treasury yield and or trade the bonds outright. So all these are things that you can do. So make sure you monitor every single one of them. It's very tedious, but if you want to make money, you got to put in the effort.
Okay, thank you, Daniel. We have questions from same person, and then for Celine question, we'll come back later. So I continue with the questions. Since you are a swing trader, do you play stock? And then continue with, since the market is at the historical high, would you recommend for short-term trading or intraday trading instead? And continue by, will this all-time high, the gold all-time high, affect other commodity futures as well?
All right, there are a few questions here. First question is, do I do stocks?
Yes.
You know, I started off my career trading futures. I started off with commodity futures and I pivoted to equity index futures. And the moment I started to trade futures, equity has no hold on me, because, like I say, equity is long bias. I can only make money by buying. What if the market doesn't go up? Okay, so it happened that when I was in the market at the beginning of my career in the mid 1980s, and the first thing that I met, the first major global contagion that I made was that global market crash, okay, in equity market. So I saw the impact of the market in the bear phase. I was fortunate enough to be selling the Hang Seng Index then, okay, but I have seen the power of falling market, and I can't do that in equity market. So from that experience onwards, I only want to trade markets that can benefit both ways. If I got a view bullish, I can buy. If I got a bearish view, I can sell. So derivatives offer that, and I don't get that in equity trading. So I am not a stock trader. Okay, so yeah, that will be the first question that I can answer you. The other question I believe is relating to, since the market is at historical high, okay, would I recommend short-term selling? What I'm doing today is in my definition short-term. Okay, the market has been ongoing for what, end October, November, December, January, February, 4.5 months. The market has been on one track. Okay, so the market is so bullish. So what I did tonight is selling. I'm doing counter trend trade. That is short term because I have a very short term view. In my opinion, that is considered short term. So again, when you are trading, never ask another person what his view is, because that person could have a very different time horizon altogether. The guy could be trading intraday and he said, I think I am bearish. And if you take his view and you are trading a swing trade, you intend a whole position and you say, oh, this expert said he's selling, okay, because he's selling, maybe I should also be selling. But your time horizon and his time horizon are not the same. So be very careful asking somebody for their opinion. If you cannot see with your own eyes, it is not there. Only when you see the chart pattern and you are convinced that the market has a certain opportunity in which you can trade, whether that the opportunity is short term or long term, again, you have to determine for your own self. Okay, because no two person trade the same way for the same duration of time. Okay, so again, you can do short-term trading. Okay, and the other question is, since gold is at all-time high, will it affect other commodity futures? Now, gold has a different driver. Gold is driven by fear of the unknown, fear of uncertainty, fear of war. Now, why I say right now the uncertainty is at a feverish pitch? Because right now in Europe, okay, do you know that going into this weekend is when the Russian presidential election is being held. Okay, from 15 to 17 is going to be the election. And everybody think, okay, right now we have the incumbent, which is Vladimir Putin. He may actually be able to retain his presidency for another term. But what if he doesn't get voted in? Somebody else comes in. Okay, so that could change the dynamic of the war that's happening in Ukraine dramatically. Okay, assuming he comes in and sits for another term, what else can happen? Now, if you are also not aware that it's this current, I believe I told you this last week, okay? Last Thursday, I did mention that this military exercise that's ongoing right now in Europe. NATO has a big, massive military exercise going on involving 90,000 troops. And the period of the exercise coincides with the day the new president or the incumbent, which is Putin, may be sworn in. And that date is May the 5th. I did mention, mark that date in your calendar because something big may happen. Whether or not Putin be elected or somebody else take over his place, something big is likely to happen in May itself. So watch out. And this fear, as evident by the rush in gold prices to all-time high, is, I think, reflecting that fear. Not so much on the economics, not because of inflation being so high. Inflation has been coming down for months if you look at the headline CPI numbers. Okay, so there's no reason to buy gold unless you think that it is something else other than inflation. So what affects gold may not necessarily affect the other commodities. Okay, right now, if you're talking about other commodities, let's say we talk about grains. Have you noticed a news that China has cancelled their order to buy US red wheat? And not just wheat, China has been cancelling a lot of their order from the American. So these are grains products. Grains products mean to say if China is not buying, what do you think the price will be? The price is going to go up or go down. Okay, China is a major buyer. Okay, so right now these are things that can happen in the grain market, which is totally nothing to do with the gold market. So they have different dynamics. So watch out. Okay. What is the next question? There's one last question here. I think when the market falls or crashes, is it possible to follow the trend by shorting markets? Okay, this is my overall view. Okay, I think the big one is not going to come this year. is going to come right after the election of the US president. And then the new president will be sworn in January of 2025. Then onwards, I think the big one will come. For now, the market is overstretched. And I always think that it's very healthy for the market to have periodically some corrective pattern. Okay, so right now we are seeing one potential corrective pattern. If this corrective pattern ends, okay, it takes the pressure off the pressure cooker for a while, allowing the market some more room to move further up. Okay, so the market may correct from time to time, but I don't expect it to crash this year. Okay, a correction can be shallow, can be deep. We do not know, okay? But right now we have to know what is the driver. The driver is the expectation of an interest rate cut. Will the Federal Reserve cut? When will it cut? What if it doesn't cut? So all these are things that we have to ask ourselves. Right now we are knowing that from the beginning of the year, talking about rate cuts, now the Fed chairman is saying, looks like we're not going to be cutting this month. We're not going to cut in May, but possibly we were looking at June. So June is most likely to be the first cut. Why? Because we have an ongoing presidential election coming in this year in the States. And the caucuses and the primaries will get hot, okay, come August. So if the Federal Reserve, okay, wants to cut, it must cut before the election gets into full swing. So most likely, if they ever want to cut, will be in June. But what if June comes, June left, market is going to correct big time because the market has been buying up, pricing itself for a rate cut. If the rate cut doesn't come or take too long to happen, then all those people who have already bought will become very jittery. So what will you do if you have a view, you take a position, and that whatever you're waiting for did not happen, or it's taking too long to happen, you will most likely cut loss. Okay, so that is the danger here. So you got to monitor the day-to-day news flow. Okay, look out for things that may actually compromise your existing position.
Yeah.
I will sell if the market is going to come down. Yes.
Okay. Mr. Daniel, we'll go back to the questions from Celine. She's a newbie in futures trading. So maybe you can share a little bit how to analyze the market, some tips.
All right, Celine, this is not the place to do the training. Okay, you want to do the training either on your own, but this stage you don't have to do it on your own. Because when I started off in this business, there was nobody I can turn to learn. Okay, but these days there are so many experts, and these days you have the internet. There's a lot of resources out there that you can actually learn things that you don't have to pay for. The basic stuff you need to learn are already out there for free, only if you know where to look. Okay? Then if you want to look for very specific strategy that you can use, find somebody who is actively trading and he's profitable and been doing it for some time. Try to lean on that person to pick their brain. So if there's such resources available there, you need the education. You need to make sure that you know what you are doing before you attempt to make. Because at the end of the day, trading is a very risky business. Okay, you need to make sure that you are aware of the risk and know how to control the risk. There is no one system out there that can make money. Okay, a lot of people say these days I can do program trading. Now, program trading works, but it only works some of the time. You cannot say I write a program and let the program run day in, day out, 24 hours a day and hope that the system will make money for you. It doesn't exist. There are certain times of the day that is not suitable for trading. So you want to turn off the program, only turn it on when the market is active. So make sure, even if you go down that route, you must make sure that you know what you are doing. There's no one system that will make you consistent money. You have to pick up those knowledge along the way, and you can actually shorten that journey, okay, by leaning on somebody who's actively doing this for a living. Don't go and learn from somebody who only teach and don't trade, because there are two different things. Somebody who can teach but don't trade is not the best person you want to be learning from. Make sure you learn from somebody who is actively trading, and it can be somebody that you know, somebody within your vicinity, somebody that you are aware of. Make sure you learn from the person. There must be something that works for him, because if he can survive 6 months without a stay and is still trading, that means to say that he must have learned something. The last thing you want to do is to learn from somebody who is just as new as you. Okay, so that will be my 2 cents worth of advice for you.
Thank you, Mr. Daniel. I think we open one more last questions from Joel also. Last week we are looking at Dow Jones to trade, and then does the view still intact?
Every day I have a view. Okay, so my view is always formed by what the market is telling me. Okay, now I have a short-term, slightly bearish view, not exceptionally bearish. Okay, but I do think that market is due for a correction, so I will position accordingly. If the market proves me wrong, obviously I cannot hold on to that view. And the way to look at it is that you can be right and still not make money, and you can be wrong and still make money. So right now, the whole idea is that you make sure you monitor on a day-to-day basis whether the sentiment has changed, whether the market outlook has changed, the price action has changed. This requires you to put in the effort every single day. The first thing I do every morning, I have a certain routine. It's actually quite boring. My routine is every morning when I wake up, the first thing I do is turn on my computer, make sure I don't miss anything, or there's something that happened while I was sleeping. Okay, and I do that even before brushing my teeth. And this must only come because you are passionate about it. If you look at this as just making money and you have no passion, it's very difficult to sustain this activity. So every day in the morning, I'll do all my basic analysis. And then when London open, I will check one more time. When London break for lunch before the New York market opens, I check one more time. So all this needs to be done on a day-to-day basis. And if I'm not able to spend time, then I do not want to take up new position. And if I want to take a position, I make sure I have my stop in place. I have my profit-taking order in place. And you say I don't have to have surprise. Everything that you do every day is a repetition of that routine. Once you have a routine, okay, it becomes very natural. But that will mean that you cannot trade this because you think that this is something that you want to do as a part-time. There's no such thing as part-time. You're either in it full-time or you're not in it.
Okay. Thank you, Mr. Daniel, for your insightful sharings. And also thank you, the audience, for engaging in the Q&A sessions. I'm quite agree that the importance of doing homework before we go into the markets, and also always set the plan before we going into any positions. That's all for the questions we have for now. Mr. Daniel, would you like to provide any closing remark before we wrap up?
Yes, if you want to know and pick my brain, okay, talk to Apex Securities and we can do more of this session. Because like I said, I do this as for a living. I breathe trading. So I'm sure you can feel my passion, right? So
Yes.
if you really want to learn, I'm sure we can create other sessions for this.
Okay, hopefully we can have another sessions with Mr. Daniel next time.
Yes.
All right, so thank you again, Mr. Daniel. Before we conclude, maybe I need to take a little of the time to introduce our services and products. So I will move into our slide. Okay. So first one is our Telegram. So welcome to join our new Telegram channels. Join us for the Apex Academic. You're able to access the Apex Academic for the daily market insights for both equity and futures market, and also the daily equity research and trading strategy. In the Telegram and Apex Academy, you also can get announcement and promotions from the company. So this is our contact number, the derivatives segment. Secondly will be the foreign futures. We just launched a foreign futures with 3 reasons why trade with us. First one is a zero platform fee and free market data. Second is an exclusive USD3 brokerage for the selected product for first 30 clients only. And there's options for the algorithm tradings, but all of these are tagged with the term and conditions. So you can ask us maybe after that. So the next one will be, we are introducing the discretionary trading. What is this? This is about the fund management. So means you can handle your account, let the professional to track for you. And then for more info, you actually can go to our website, apexetrade.com. So you can saw the banner here. To get the contact number, to know about the details, you can just click into it, click into the banner here. Okay. For Apex Academic, just how I mentioned, it's linked to the Telegram. So if you join the Telegram, you're able to access to the Apex Academic for the insightful, like trading strategy and the daily updates. So we have equity derivative. So we have the daily updates. Okay, and this is our morning briefing sessions.
Before making any buy.
Yeah, we have PM and AM sessions. Means after the market close on the first sessions, we will come up with the second session's trading strategy. Okay. So that's all from our side. And then, okay, thank you for attending. If you have any further questions or you need any assistance, feel free to reach out. And good night, everyone.
Good night. You can see that the position has been very profitable so far.
Yeah.
All right, guys. Thank you very much.
Thank you.
Can you show the slide, please? Oh, I think this one is it.
Thank you. Thank you. Good night.
Thank you, everyone.
Good night.